Buy the dip in MasterCard. We'll talk about that and the Q3 numbers on today's show. What is going on, investors? Hopefully, you guys are having a great day out there. It is time to talk MasterCard, ticker symbol MA. Yesterday, it was Visa. Today, we're pulling out our MasterCard. Okay, over the last year, the stock's up 5.8%. But look, over the year to date, stock's down nearly 6%, and it's falling on the backs of its Q3 earnings, which just came out, where we saw revenue growth of 30% on this one. We'll talk about that, and then we got to look at this from a technical perspective. You're going to want to whip out your MasterCard and buy some shares of this company. I think this is pulling into an absolute sensational area of demand, and I think we can probably buy the dip on this one. We'll talk about more of that in a second. Now, MasterCard came out with their Q3 earnings. This is on the heels of Visa coming out with theirs, and MasterCard's look incredibly healthy as well. Their revenues, like we talked about, came in at $5 billion. That is up 30% year over year. I love stocks like this, okay, that are growing their top line. Not only are they growing their top line at MasterCard, but they're growing it profitably. We'll take a look at the numbers in more detail here in a second. Now, the other thing that we want to talk about is that cross-border spending rebounding. In fact, yesterday we talked about on the Visa call that Visa's CEO was actually kind of cautious about the cross-border spending. If you don't know what cross-border spending, it's basically international travel. So you fly from here to the US to Europe and you start spending money in that country using your MasterCard. That's incredible business for both Visa and MasterCard. Obviously, when you travel to other countries, it's very, very convenient to use your credit card if at all possible. So these companies make a lot of money off of that traffic. It's something that obviously over 2020, when people were not allowed to travel, and a lot of that was actually shut down by the governments and by travel, well, look, it absolutely hurt these companies' performance. Now, if you look at the stock performance of these companies over the last 5 years, this thing's still up 224%. So it's kind of a blip in the radar screen, but the CEO of MasterCard was actually completely different and in their tone on this cross-border traffic. Take a look at this. This is a direct quote from the MasterCard CEO. He says, "Our performance was driven by the execution of our strategy, healthy domestic spending, and solid growth in our cross-border spending, which has recently returned to pre-pandemic levels." So we've already seen that cross-border traffic, at least over at MasterCard, has returned to pre-2020 levels, basically back to where we were in 2019. That is absolutely fantastic. And if that trend continues, that can be incredibly bullish for both the payment processors, including MasterCard. Now let's jump into these Q3 numbers. Our far left column is our most recent quarter, 2021. We pulled down that net revenue, which we talked about, which is rounded up to $5 billion. Last year, we're sitting at $3.8 billion. So we bolted on over $1.1 billion to our revenue side. Let's see how that has flowed down through to our operating side. We see here our general administrative expenses have ticked up just a little bit. Advertising and marketing up just fractionally, quite frankly. Depreciation and amortization is a non-cash charge that ticked up marginally. And then we've got nice little provision for litigation. You got to love that. The lawyers love that. And that has ticked up just a little bit, but that's basically around an error, no big deal, although the lawyers will appreciate that. So our total operating expenses went from 1.7 up to 2.2. So we got about $500 million or so in operating expenses. And I told you we grew our revenues by 1.1 billion. So you guessed it, our operating income, ba-boom. We went from 2.1 up 600 million to 2.7 billion dollars on that operating income side. You gotta love that. Now I'm going to flow down through to the net income side, which looks really good. Came in at $2.4 billion. We're sitting at $1.5 billion. This is after they pay taxes. They pay a little interest, or in some cases get interest on the money that they have sitting in a bank account. So we get down to this diluted earning per share. Now, we don't always do this, but I often do this with companies that pay a dividend just to see how much more they could pay us as shareholders. Take a look at this. In the most recent quarter, we've earned $2.44 per share. Last year, we're sitting at $1.51. For the last 9 months, we've earned $6.35 per share. I'll take you over here to show you the dividend rate is just $1.76 over over at MasterCard. Show me the money, baby. They could be paying a lot more on this dividend, and I would expect we saw Visa increase their dividend. I think it was off the top of my head 17%, and I think MasterCard could fall in line, maybe not necessarily 17%. Boy, they could increase their dividend by 50%, and this company has plenty of coverage. That's why you get excited about a company like this. Okay, first thing you get excited about is over the last 5 years, stocks up to over 200%. Last 10 years, stocks up, just 800%. So you definitely get excited about that, but on top of that, you've got this dividend that is going to consistently grow. If you're going to buy MasterCard and Visa, I like it in a long-term portfolio. So maybe some of you guys are watching, you're very close to retirement already. I wouldn't shy you away from this, but maybe you've got kids, maybe you've got grandchildren. I think MasterCard Visa is perfect for that 20-year, 30-year portfolio. If you have that type of time horizon, these companies have an incredible moat around their business, and they've just proven time and time again that their service is very, very valuable. And even with the onset of a Bitcoin, which MasterCard is investing in and will likely get a piece of that action at some point, cryptocurrencies, other types of ways to pay. You even have upstart companies like Square and PayPal out there, although PayPal's been around for 2 decades. Those companies use MasterCard and Visa, okay? These companies are ingrained in payments, and I just don't think that's going to go away. Now, we come down here to the balance sheet. What jumps off right off the top of my head is that we've got cash and cash equivalents at the beginning of the year was sitting at $10 billion. Now we're down to $6.4 billion. So you might, a good investor, especially if you haven't been following MasterCard, okay? MasterCard's not an investment that I have. So I'll be honest with you, I haven't been following all the press releases. I did go through them. I saw that they made a lot of little acquisitions over the last year. But let's just say you didn't have the time to investigate all that, okay? And you see that you've gone from $10 billion down to $6 billion, and you're wondering, how do I find out what they spent that money on? I'll show you in a second. Give you a hint. You actually come down to cash flows. And so I'll show you here in about a minute's time where this cash actually went. And it's very valuable if you're an investor to be able to determine this on your own very quickly. And I'm going to show you how you're going to be able to do that. So we shed off like $5.6 billion, $5.7 billion in cash. And you're wondering, where the heck did that go? This company just printed a crap ton of money to the bottom line in the most recent quarter, like literally $2.4 billion. So where'd that cash go? Good question to ask. I'll help you answer it here in a second. Now, we do got some long-term debt on this, but total liabilities clocking in just at $28 billion. We've got total assets coming in at $35 billion. Very financially healthy company. Nothing to be worried about at all. So we come down to our cash flow statement. We got our last 9 months ended here. We got $6.3 billion. We pull down that $6.3 billion. If you're wondering where this $6.3 billion number comes from. So here's our statement of operations, our profit and loss. Here's our 9 months over here. Here's our top line revenue. After all our expenses, after we pay the government taxes, we come down to net income and we print this $6.3 billion number. Last year, we're sitting at $4.6 billion. So now we come down to cash flows and we pull down that $6.3 billion worth of net income. Remember, this is for 9 months. And then we pull down the 4.6 to compare it to last year. And you get to add back in some things like depreciation and amortization. That's an accounting measure, not necessarily cash flowing out of the business. Some other things as well coming in and out of the business, not necessarily at the current time. So you get the net cash provided by these operating activities down here at $6.2 billion. Quite frankly, these numbers are almost identical. That's why I really like this company, is because what they churn out on a net income side is often what they churned out of the cash business, because this business is really simple, okay? It's not a very complicated business. As you saw from their expense structure as well, they grew their revenues by over $1 billion and their expenses barely budged, okay? And so that's why I love these companies. That's why these companies, for a long-term investment, kind of set and forget investment, these are fantastic. Same thing held true for last quarter as well, or last year on a 9-month basis as well. Now, let's talk about where that cash went, because we talked about how, look, we had $10 billion worth of cash sitting in our balance sheet in December, and now it's gone, okay? Like $4 billion have shed it off. We come down here and we start looking first in investing activities. This is where you first can see where that money has gone. And I'll have you just scan this aisle here, these 2 aisles. Where's the number that stands out? What you look for is numbers that don't match up. Okay. All these numbers, very similar, very similar, very similar. Nothing really to see here. Well, boom, here it is. $4.1 billion acquisition of businesses, net of cash acquired. So sometimes these businesses that they acquire have cash sitting on their balance sheet. So that basically goes into the pocket of MasterCard. This is the cash that they had to pay out net of that cash that was sitting on the balance sheet of the companies that they acquired. That's where the money flowed out. So if it's not here, okay, if the money out of the balance sheet is not here, it'll be down here in financing activities. Typically what you would see is this company would have repaid maybe some debt or something like that, or paid out some really big dividend. That is what typically happens down here in financing. So we've got our dividends paid that came in at 1.3. It's over where we were last year, likely because we increased our dividend payment year over year over at MasterCard as well. We've got proceeds from debt. Looks like they took out a little bit more debt, about $1.2 billion, maybe to partly finance or offset these costs of these acquisitions. All things being considered, I love what I'm seeing over at MasterCard. Now, what I'm loving even more is this technical chart. Now, it's not beautiful, okay? It's not the most sexy chart. It doesn't look like this one wants to rebound and rebound hard, but we are coming into an area of support here right at $330 per share. Right now, as I'm recording this video, MasterCard's at $334 per share. So if you want to split hairs and wait till it comes all the way down to $330, well, I tell you what, you're a very prudent investor. If you're like me, you don't own any shares of MasterCard, you got some money sitting in your IRA account that's stacking up. I mean, I've got like probably 8%, 9% cash because the market's just been absolutely blowing up, and it's really, really hard to justify buying more shares of a company. What I'm seeing here is we're still kind of in an uptrend, okay? You can draw these lines and say, hey, the uptrend was here and we broke it. Yes, that is absolutely technically true, but the other way you could look at it, I mean, that's why I don't like these vertical lines or these lines that kind of trend up and down, is you can draw them any way you want and kind of tell you what you want to hear. Really what we're looking at is buyers have stepped in, okay, right here at $330 per share, and they've done it consistently over the last year. Now, here's the thing. If buyers do not step in here at $330, well, we're coming lower on this one, okay? Much lower. In fact, I think you could easily come down here at about $310 per share on MasterCard, but I like it here at $330, okay? Would I go all in? Say I wanted 10 shares of MasterCard, which should be about $3,000. Would I just whap all 10 shares right now? No, probably not. Maybe 2 or 3 of them. I'd start with maybe a 20%, 30% position. Wait to see what happens. If you get a little bounce here, you could probably buy a few more. If you break through this 330 level, well, now you're getting a little more aggressive. Instead of buying 2 shares, maybe you buy 3 or 4, and then you finish off your position if this thing ends up bottoming out. I tell you what, I think your downside on this one, if the momentum continues down, and look, in the shorter term, we are absolutely in a downtrend on this one, okay? You've got a high here, lower high, lower high. The stock has got to rebound at some point. Otherwise, it's going to continue to trend downward. I think your lower end of your range is down here about $290 per share. That's where the stock bottomed out here, bottomed out back here, last June, in fact. And so I like it. I don't love it from a technical perspective, but we are at an area where buyers have stepped in traditionally, really over the last year, and so I like it from that perspective. And if you are buying and holding this, I'm looking at this stock from the buy and hold perspective. If you're looking for call options, you're looking for put options, you're looking to trade this thing, you're on your own, okay? I'm looking at this buy and hold, collect this dividend, watch this capital appreciation just continue. I mean, these stocks, Visa and MasterCard, just look like the side of a mountain, and I really don't necessarily see anything on the horizon that is going to stop these companies from continuing to churn upwards, and they probably can continue to do acquisitions like MasterCard has and continue to increase that dividend, which I think is the most important thing of owning this stock. That was MasterCard. Hopefully you guys enjoyed this video. Back again soon with more. Big day of earnings. Good luck with your investments.